Making Tax Digital was introduced in the UK in 2019. It is part of HMRC's plan to become one of the most sophisticated tax authorities in the world, while another key aim of the regime is to close the so-called tax gap, that is, the difference between what taxpayers are due to pay and what actually gets paid. While there are plans afoot for Making Tax Digital to be expanded into income tax and corporation tax in the coming years, Making Tax Digital for VAT is the first part of HMRC's journey. There are three principal requirements under Making Tax Digital for VAT. Two of these have been in effect since 2019. Firstly, that's the requirement to maintain records digitally, and secondly, the requirement to submit VAT returns digitally using API-enabled software. However, the final and perhaps most challenging element of the Making Tax Digital for VAT regime comes into effect from the 1st of April this year. That is the requirement to have digital links or a digital audit trail in place. So what does this mean? Traditionally, data used to support VAT filings would have been manually extracted from ERP and other systems and copied into VAT return work papers, which are in Excel for many businesses. The digital links requirement prohibits the use of copy and paste or the rekeying of data as part of the VAT return preparation process. The expectation, therefore, is that there's a full digital audit trail in place to support the numbers disclosed in the VAT return. This calls for a degree of automation in the VAT reporting process, and in many cases a change to operating procedures. This can be a challenge where there are a number of manual adjustments made in the preparation of VAT workings, or where the business has data that's been sourced from multiple systems. While there are many competing priorities for businesses at this time, it is important that Making Tax Digital remains a priority, and that the necessary changes are made to ensure that the required digital links are in place ahead of the April deadline.